Time for Futures in Focus now. Oil is lower as traders assess escalating tensions between the world's two biggest economies, as well as an upcoming OPEC meeting. Joining us from the CME is Chris Gersch of Bell Curve Capital. Chris, great to see you. What are the trades to be put on before Friday?
Vonnie, I think that we're actually going to go higher from here. Despite a really strong dollar and those trade concerns, really having oil traders concerned about third quarter earnings, I saw WTI really hold in it at that 64.50 base. And so ultimately, as long as it holds that level, I believe it can go higher.
Chris, how are you calculating all the different effects? On the one hand, you have trade wars potentially escalating. On the other, you have OPEC and a potentially fractious or a definitely fractious meeting coming up. How do you weigh one against the other?
I'm really weighing China as something that's going to take some time to develop. So ultimately, those tariffs are going to take place in July if they do occur. I think it's a little tit for tat right now. OPEC right now, there's a real big concern with Russia and Saudi Arabia coming in, adding that production level. And despite Iraq, Iran, and Venezuela coming in saying that they're going to veto that vote, Russia and Saudi Arabia have a huge pull, and they might break away and just, produce it on their own. That being said, that volatility, I believe, is to a higher oil price.
So where do you see the price of a barrel of WTI in the intermediate term?
In the intermediate term, I think we're going to be at 64.50. If that level does not hold right where we're trading right now, 62 is the base. So I believe 62 to about 68.5 before the July 4th holiday.
All right, Chris Gersch of Bell Curve Capital. That's today's Futures in Focus.